Daily Fiscal Pulse for the 3rd of August, 2026. What you're looking at today is a one-day look back on the flows, capturing where things stood as Monday's close happened, not live market conditions. Let's frame what's actually moving markets at the moment. The Iran and Middle East conflict is the story dominating headlines. We're seeing coverage around Besant's comments about a potential deal Tuesday or Wednesday that could open the Strait of Hormuz with freedom of navigation language, and that narrative is clearly influencing price action across the board. Still, it's worth cutting through the noise to focus on what the actual flows are telling us. The headline number on the day is straightforward. Net fiscal transfer landed at $2.7 billion, with tax receipts carrying the load at $50.2 billion. On the surface, nothing stands out as unusual here. The S&P 500 futures show resilience. ES closed at 7,628, maintaining a position above the 20-day moving average of 7,524. Over the past 20 days, the range has spanned about 292 points. Despite fiscal headwinds, price is holding up. Things become more revealing when you pull back slightly. The 5-day average for government spending is tracking around $27.8 billion daily. Set that against the 20-day average of roughly $12.1 billion, and you're looking at more cash flowing through to households and subsequently into markets. Year over year, the picture remains consistent. Fiscal year-to-date spending totals $1,454.7 billion, representing a roughly 13% decrease compared to the same stretch last year. That's a substantial pullback in fiscal support, and it does affect overall system liquidity. From a positioning lens, fiscal flows aren't signaling a clear directional edge at this moment. The conditions gauge sits at -41. Context matters, though. We've observed similar setups repeatedly, and even when liquidity is lighter, the S&P has historically averaged around plus 1.5% gains in the following month. Markets don't track liquidity in a straight line. They can and regularly do push higher regardless. Positioning adds another consideration. Leveraged funds keep extending long exposure while margin debt sits at the 100th percentile. That's a heightened level. Historically, those readings function more as a caution than an all-clear signal. The practical implication here is this. With fiscal flows undershooting last year's pace, the system's absorptive capacity is diminished. When news breaks favorably, markets can still edge upward, but when risk events materialize, like escalation in the Iran and Middle East conflict, downside can accelerate sharply, primarily because there's less liquidity underneath absorbing the move. Keep watch on a couple of dates ahead. The 12th of August marks the SSA payment cycle on the second Wednesday, capable of altering near-term flow patterns. The Treasury coupon interest payment window arrives around the 15th of August. Fiscal conditions are restrictive, and the degree of drag is what drives decisions going forward. Monitor the scheduled flows for your next signal. That's where the advantage sits right now.